And welcome back to NinjaTrader Live. I'm your host, Tom Schneider, CMT with NinjaTrader, and I'm filling in for Jim Cagnina on Let's Talk Futures. But it's my pleasure to do so because he picked out a great guest. He actually picked out some great guests while he was gone. He scoots off to Italy. And so it's my pleasure to be on the program with Mike Arnold. Mike, how you doing?
I'm doing fantastic. How about you?
Doing okay. This is day two of, well, actually it's day five of not having Jim here, but it feels like day two. So I think we're doing okay.
Well, that's good to hear.
Yeah, how are you doing?
Fantastic. I'm just hot.
Yeah, you told me on the break that Arizona is still in triple digits.
Yeah, we're setting records every day. I mean, we're even setting record lows. In September was the hottest month ever for September. The average temperature was 94.2 degrees. So that's your 24-hour average temperature. And that broke the prior record the prior record was 92 degrees that was set years ago. So we broke the all-time average for September by 2.4 degrees.
Oh
So
my gosh.
now, I don't mind the heat, but at some point, you want it to be below 100.
Right, right. Oh, I don't know. I've been to Arizona in the summer, in the summer, right? July, August when it's 115, and
Yeah.
that's uncomfortable, but you do have, I mean, it's not like you're just hanging out outside, right? You've got air conditioning full blast wherever you go. So it's for me it's very bearable.
Yeah, and now, see, we should be in about 94 degrees as an average high. And the 94 degrees out here doesn't feel very bad. But sometimes you just get a little tired of, because we got into the hundreds starting in May,
Oh,
and we've stayed in the hundreds besides about 1 week in September. We've stayed in the hundreds since May. So,
wow.
but that's why you have air conditioning, and we don't get snow. So unless you're up in northern Arizona.
Well, and Mike, I don't know if you know this, but snow and cold weather is a lot more hard on the body than hot weather.
Yeah, I do know that after so many years in Chicago, I could not wait to get out. And having lived in Arizona before and then having to go back to Chicago, that was my system did not like that at all.
Oh, I'll bet. I'll bet. Yeah, I wasn't smart. I went to another cold area, just not as cold. I went to the Northeast. So I'm looking for the day when I can join you out where you are because I love that part of the country. It's great. Um,
Yeah, it's beautiful.
so Mike, thanks for coming back on. We are working through some a little bit of issue, but I think we've got enough resolved that we can go ahead and take a look at the charts. I'm just going to make a quick change because I know you have a very specific set of tools you like to look at, so to speak, and I'm trying to replicate on the fly a little bit what those look like, and I think I've done it. So let's start off with the E-mini S&P. I think that's a great place to start anyway, right?
Yeah, that's the one with the absolute best setups right now. So that's been my sole focus recently.
Oh,
Oh,
well, let's
fantastic.
look at that. Mission control it came through. Let's do it. Let's switch over to Mike's. Awesome. It's great.
All right.
Let me do
Thank
this,
you for
Mike. I'll stop
Thank you for
sharing my screen.
duplicating it in
There you go.
the emergency we did not end up having.
That's right. So let's go through. You say, I mean, we buried the lead a little bit there. How's it? This is the E-mini. This is what you're saying is what could be a really good setup.
Well, all right. Short term, we're still on every time frame. We're still in bullish mode. We're
Yes.
still in bullish mode. Just from a pure price action standpoint, we set the high area at the end of August, beginning of September. Then we had a sideways correction that turned into a pullback correction. And those are the
Okay.
two kinds of corrections I always talk about. So far, since the 19th of September, big green bar, we've really had a sideways correction.
Mhm.
Holding above the highs from beginning of September. So we've again holding above And any dip into the rotation zone, which is between the 8 EMA and 21 EMA, during the sideways correction has been bought. We, if you do a little candlestick math where you add two candles together, like if we add the fourth and the eighth and seventh candle together, which was Friday and Monday, it really just went nowhere. It would be a
It's like,
long-legged topping doji, but today it's getting bought again. Now, two things. We have the CPI coming up on Thursday.
right.
Could it be a repeat of the end of or beginning of September where the sideways correction turned into a pullback correction? We do have a potential double top pattern here. Although if we rotate back above in the next couple of days, above about 58.15, that pattern is off the table. But if we don't take that pattern off the table and we close or trade with momentum intraday below the seconds lows, which right around this 57.24, and then follow through with a close, it does trigger a pullback correction with a minor target area being around 56.70 and a major target area being 56.40. If we then follow through with a close below about 56.95, I go into more medium-term bearish mode because we could easily come down and tackle the 200 simple area and still the major pullback area on a harmonic perspective of 54.25 to 55.05, which is a very key level of support. Now, that being said, we are still in a sideways correction with the dips getting bought in the rotation zone. What's interesting is if we do close below the seconds lows, October seconds lows, we would also close below the rotation zone. Until that happens, though, we're still favored for a potential price breakout to the upside because we're still holding the major support. This 57.25 level, major support. If we do break out, take out the highs from the 26th of September, we have some harmonic clusters higher. We have a fair amount of harmonic clusters higher. The first major cluster being between 58.57 and 58.76. So that would be an area that I would at least look on any breakout play to raise a stop. I heard you talking in the last session about trailing stops, and this is where that would be a level that I'd start raising my trailing stop, okay? Because this could turn into a runner again. We could, if we break out, the next magnet prices could take us very close to about 59.50 to 6,000. So I'd like to give it room to potentially run if we do break out to the upside. So those are the two scenarios we're setting up for going into CPI and then not as important PPI, but really, if there's a shocker to the upside in the CPI, could we then trigger the pullback move if CPI comes in benign and you're still pricing in 25 bips cut in November and December? Could we just be off to the races again? And I think one of the big banks put out revised their target to 6,000 for the end of the year. So I think that was Goldman did that. So that could be a major magnet price to the upside.
Yeah, interesting, the downside targets. You mentioned that area around the 62.5% retracement on the longer term. That area is also supported by the 200-day moving average, which acted as support. You think of a retracement back down there, it might take out those lows in September, but it's still supported by the 200 if it gets down there, ideally. And that happened before in August. And look what happened after, right? When we retrace that far, you think, my gosh, this is, those 3 days, really, really, really bearish days into that low. There's hope, right? There's hope of that, 200-day moving average, kind of Superman with the cape that saves the market a little bit. Doesn't always work, of course, but that's also what I see when you were talking about that 54.25 area.
And that's exactly right. And based off the harmonics and all the research I've done, if we close below that 54.25 especially if we do that on a weekly basis. That would shift the probabilities to then we would probably lose the 200 on a weekly basis closing, which we did not close below it at the August lows. We
Right.
lose that closing on a closing basis, and we lose the 62.5 harmonic on a closing basis, and that shifts the probabilities to at least a retest of those
Mm.
August lows. So that is going to be very key going in because we have the election coming up too. I mean,
Right.
beginning of next month. If anything triggers, we have instability in the Middle East. Whatever could trigger a sell-off, I'd like everybody to just jot down for the DEES contract in the S&P. It's 54, 24, 25. So just jot down 54, 25. You start seeing that gets lost first on a daily and then followed through with a weekly close. That's where I will be medium-term bearish, short-term bearish, and at least watching for a bigger pullback. If we do hold that level, 54.25, could that be, hey, could we then get the bounce into the year end off of those levels? We don't know, but this is why we can already have a roadmap set up.
Yeah, that's why I like these levels, right? We're not saying which way it's going to go. We're just prepared whichever way this market goes. You've got targets on the upside, targets on the downside based on previous price action, which is so key.
Correct. And I find it helpful to have my levels and everything laid out. So then I'm saying, all right, the market's doing this. Here's where I'm watching for my key support. Here's where I'm watching for my key targets. Here's where I need my stops below or above, depending on the trade direction in the shorter term. Therefore, I'm not trying to come up with something at the last minute. Now I am saying the price action is doing this, like on Thursday, based off the CPI print. The price action is doing this. I already know now it's my job to find the short-term trade, not to try to dial in all the levels and react and not even have levels on there and go, now what do I do? What do I do? It's breaking to the upside. What do I do?
Right. Right. I like that. Now, I'm trying to, look at my memory banks back in September. We had that consolidation area at the end of August, and then beginning of
Mhm.
September, we had that breakdown. Was that a PCE number? Was that a jobs number? What was that? Do you remember?
I was just thinking that same thing, and I do not. That might have been the jobs number.
Yeah, I think that might have
I
been a
think it was the
Friday and it
jobs
was
number.
unemployment and it came in, maybe unemployment spike, the rate. I can't remember, but that's why it's important to know when these news events come out, right? You mentioned CPI Thursday, PPI Friday. Um, some people who are technically based don't really pay attention to the news. They just say, well, let me look at the charts and the charts will tell me what the news is. But I think in this case, when you have a roadmap, it's also nice to know when there's a possibility of hitting those levels, right? There's, today, like today, NFIB, small business, not going to move the market. Sorry. Um, but you still have these levels based on price action. We just might not get to them unless it's like on Thursday where we get CPI, which tells us a lot about what the Fed might do in the next meeting. So I think it's one of those things where the blend of news and technicals really makes sense in this kind of chart.
And I need to know what the catalyst could be for market movement. I mean,
Right.
the only other thing we have tomorrow is the FOMC minutes tomorrow afternoon, but I'm not expecting that to be a major catalyst right in front of the CPI numbers. So because of that, I have to take that into account with my shorter term setups. And I'm not trying to predict. I'm not trying to say, and say, inflation is going to come in hotter or weaker than expected and try to pre-position myself guessing off where the number is going to be and how the market's going to react. I need to know, hey, when that number hits, I can't just be in la la land. And especially from a short term trader, I have to be prepared to take action, even on potentially longer term trades. Let's say I'm going into that with a bullish setup and we start breaking below those lows from the 2nd of October, that could trigger the bigger pullback move. So I have to be aware
Right.
of that and know where my stops are for any longs that still might be in position heading into that number.
Oh, totally agree. That's a good point. Now, this is the mini. You said it was kind of the best setup that you're seeing. Is there you focus, well, you do look at the NASDAQ, I know that. Do you look at, say, the Russell or the Dow?
The Russell and Dow don't have any really great setups right now.
Okay.
The S&P has the best setups. Now I just put up the NASDAQ. The NASDAQ's interesting is it's trying to still base. It broke above the highs from the end of August, but could not sustain it. But if you see right here, if I draw a line, let me get my horizontal line out. If I put a line right here, you see we popped above it for just a couple days, but there's been a fair amount of selling pressure above that. However, if if it can really start launching above about 20,350,
Hmm.
especially on Thursday with the CPI number, then my next very key to remember, we will not have broken out to new highs in the NASDAQ, but the key magnet price is around 20,750, 20,760. That will be the key magnet price based off of tipping of probabilities in the 87.5 harmonic. You also see in the NASDAQ any dip into and even slightly below the rotation zone and holding above the secondary support level, which I'll draw right now. Here's the secondary support level. Here is that same sell-off from the 3rd of September. So this was a very key prior resistance level becoming support. And you see any dip into that last week was bought.
Yeah.
So that's the key line in the sand for me. That's very key for me. Also, if we lose that level, we'll probably lose the 50. And then the magnet prices lower are 19,555 roughly, 19,310. We close below 19,310. The magnet price then becomes 18,820. The only gotchas we have the 200 in the way, but again, that's not a brick wall. We broke below it. As opposed to the S&P, the NASDAQ's a lot noisier when it comes to these key moving averages. So we did break below it and closed below it on August 5th, but then we rebounded above it on the 8th. So it's an area I watch, and that puts it in that area again. Another interesting thing on the NASDAQ is we've chipped away at the 200 now 3 times. Every time you chip away at it, it becomes weaker.
Right.
And one of these might not be this next test whenever that happens, but one of these, it's going to kiss it goodbye. Just don't know the timing about that. We could rally through the end of the year and be revisiting the same conversation sometime next spring.
Well, and Mike, that's a good point. With the NASDAQ, we say it tends to be more volatile of a market. And when you see this, since April, the 200 has been touched or even closed below 3 times. Is it just that volatility? I tend to think not. I think it's more about, yeah, NASDAQ's weaker than the E-mini this entire year. And could it be that maybe that story of AI or semiconductors saw the peak exuberance either last year or early this year, and the shininess off the new toy is kind of coming off a little bit. We're going into the fourth quarter earnings seasons, which I don't think historically are typically knock it out of the park's quarters. I think they're actually, because they speak about the next year, they might put a little bit of a dullness on the stock market.
And earnings estimates have been being brought down.
Yeah.
They're softening it, so it's going to be easier to beat. But it's again, if you ratchet down earnings estimates low enough, anything's a beat. So,
Right.
but
Right.
you're definitely right. I mean, we AI I think really did top out in July with the AI hype. It doesn't mean you won't get the short-term bursts. You still have Nvidia hanging in there. Uh, but that has not gone to new highs. It's still, holding up. That's one from a stock perspective. If Nvidia starts rolling over, then it's sort of in the nail in the coffin of the AI bubble for me. Until that happens, though, yeah, the NASDAQ's weaker. However, we start breaking. If the S&P goes to new highs, the NASDAQ could at least come and retest this high area before topping out again. So, in the short term, unless we start breaking below this very key level of about 19,950, I got to stay with the potential short-term and medium-term bullish trades. However, if we do break down and start, I'd probably look to, well, I know I'll definitely look to, if we do roll over and break those key levels we talked about the S&P, I'll be looking first and foremost to the shorts in the NASDAQ. To the downside, I'm looking for, if we break down shorts in the NASDAQ, if we break up, I'll turn first to the S&P, because we could easily break to that 6K number before year end.
So, one thing that you have this resistance area that became support, right? That what we call wicked through, right? We've traded below, but can't quite get below it, right? In the last week or so. That's being buoyed though by your 8 period. Is it your 8 period or your 21 period? I think
21,
it's your 21 period.
That's the 21.
Yeah, so I look at when I compare the 8 and the 21 to me, generally speaking, in an uptrend is more of a safety net, right? That you call it rotation zone. Could that explain why maybe we've only wicked through that important area? We were talking, somebody asked about wicking through and the importance of what that means. And to me, wicking through but not closing near or below, if we're talking about wicking through from the top side, that to me suggests that area that was resistance before is definitely a little more supportive than we think. We're not chipping away at that just by wicking through, right? We want to close closer to that level.
I mean, you have a couple things. A lot of algorithms, whether you use a 20 EMA, 21 EMA, that's a very key area that a lot of algos are looking for buys. It's also my final line in the sand. We start closing below that, I go from short-term bullish to at least neutral mode, and we'll watch for going short-term bearish. You also still have, they just happen to line up a lot of times in the same areas. You have the prior major resistance becoming support, also confirmed by that 21. That does not mean, what I do is, that does not mean, just because we're hitting a magic moving average, it's a magical buy. What I'm doing is watching in that vicinity on shorter term charts. I'm watching for any buy setups around those levels. Keyword, around those levels. Not, these are areas, not floors. I mean,
absolute
you can dip
numbers
through the floor.
to the tick. Right. Yeah.
So that's what I'm watching for. That's why the first, on any the way I look at this, on any stronger moves, I'm watching for reactions. Like on any stronger moves, I'm watching for dips closer to the 8 EMA. For any extended pullbacks or consolidations, I start watching closer to the 21 EMA. And then I use those levels on my higher charts. And then I use the shorter term charts to develop intraday setups.
Got it. That makes sense. So do you look at any other markets? Do you look at like gold or crude?
I do. I don't think I have any of them up right now.
That's
I
fine.
can talk crude. The crude just hit. We broke out for the last few days. I can talk crude because there was a wonderful little trade, a double bottom pattern in crude that just yesterday hit the exact full target, and it also hit its area of the 200 simple, and now we're pulling back today. So that was definitely a key area, but nothing's been invalid on any of this crude pullback. I'm still watching for some potential buy opportunities. Do I have crude in any of these lists? Let's see.
Yeah, I put you on the spot, Mike. I apologize.
Oh, no problem. I don't mind talking crude.
Crude is a tricky market just because of the geopolitical situation that we find, the Middle East in, and of course the ongoing situation in Eastern Europe. And then, of course, we have the normal forces, right? What we would do with the SPR seems to be dwarfed by what the OPEC Plus membership can do. And to me, crude trades technically until we get big news. That's just kind of the bottom line about crude. But when it gets news, it still respects those levels that you might find with the harmonics.
Correct. Yeah, it definitely does. And when there's major news or something coming out on crude, yes, it definitely does trump everything, because that's where you can get the massive momentum moves in the short term. But also, crude tends to run and then consolidate for periods of time.
Yes.
And within the consolidation, I mean, if we look here, here was the double. See, technically for a double bottom, it has to get, I don't have the pullback harmonics here, it has to get below the 75%, which this wick spike down did. Then using that to this area, the full target, and you can see here, there's 100% target. Now, we're not trying to hit things. I mean, this was within a penny. But we're not trying to do that we're just trying to say, hey, this is where we're likely going to have another reaction in that area. It just happened to get within a penny. But then you see, look where we broke above the 200. We triggered this little mini pattern, ran straight up through all the targets, and then we're getting an outside key reversal day. I'm sorry, I said yesterday we hit the target. We actually hit it this morning earlier. We're now pulling back, but interesting enough is we're pulling back into the very key support zone. I mean, we still have support between about, on the November contract, about 71.50 to 72.50. I mentioned this morning on my live stream earlier, I was watching between 72 and 73. I might drop that to about 71.50 to 72.50 for a short-term support base to build. If we start closing back below 71, that will be losing the 21 EMA and losing the key support level. Then I'll start watching for consolidation back down in the upper 60s. But until that happens, we could easily return here and then at least get some short-term pressure back upwards.
Awesome. Mike, it goes way too fast. Thanks for everything you do. But where can people find you if they want to, learn more?
You can follow me on Twitter/X at MG Arnold. And the best place to find me every day is on YouTube. Just search for Path Trading Partners. And I'm on a live stream Monday through Friday every morning.
Well, thanks so much, Mike, for coming back. I recommend everybody looking for Mike on the socials. Great analysis. And I love when you're on Bobby and Jimmy's podcast every month.
There should be another one dropping like today, I think, maybe. So
good.
That was recorded last weekend. This is actually interesting because I talked crude before any of this happened. We talked it last week when it was recorded. So now you're going to get to see the thoughts and then how it played out exactly.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.